Hi, this is Mark with ValueCharts.com. Let's take a look at the S&P 500. Today is July 24th, Tuesday, and we're starting to see some interesting evidence that the S&P 500 could potentially head south. So let's first take a look at some of the indicators we have up here. Here at the top of our screen, we see the indicator that we would call value bars. And basically this is derived from the value charts indicator. I'm going to kind of frame this here at the top. That is basically projecting the valuation zones from value charts. If you're not familiar with value charts, visit valuecharts.com. It's a great indicator, should be required equipment for every serious trader's toolbox. We have directly below that the MQ momentum indicator, which is one of my personal favorites. We have below that the cycle finder here in white, and then at the very bottom of the screen we have the buy strength, what's called it's really buy sell strength indicator. So looking at what all of these indicators have to tell us, the value bars overlay at the top, and then the MQ momentum, cycle finder, and buy strength. Let's take a look at what these indicators are telling us. First of all, I want to note that the value bars indicator we can see barely up here. I'm gonna see if we can look at these a little closer, but you'll notice that over the last 5 weeks or so we've seen some upper yellow portions of the price bars. This indicates that this market has traded in the moderately overvalued valuation range. So there's been some excellent shorting price levels here for us in these weekly bars. Now, two things to notice here is that this market has not been strong enough for us to get, or this market to get back into significantly overvalued, which is the upper red zone here we see a number of weeks ago. But so really this market is not strong enough to get us up there, and that's certainly noteworthy. We want to make sure we take note of that. Notice also that momentum has been weakening really for the last couple of cycles here. Well, notice back in the late fall, we had an upsurge in momentum on a weekly basis. We had a weaker upsurge in momentum here throughout the spring, and now we're in the summer. With this latest correction that I view as the market is correcting right now, we have really the weakest momentum there. In fact, I'll draw that a little bit lower to signify that. So only 4 bars, barely pushing up on the momentum histogram here, and now we're threatening to go negative on the weekly momentum indicator. So the weekly indicators, the weekly chart is pointing south at this point in time. We obviously want to continue to look at what the market's telling us, but let's drill down to daily and see what the daily price bars are telling us about this market. So I'm going to go ahead and let's go ahead and take a look at what's happened today specifically and what the ramifications are of this. We'll notice that over the last several weeks, the S&P 500 daily chart has been in somewhat of a channel here. And today is the first day where this market has actually closed through the bottom of the channel. So that's very noteworthy there. Let's see if we have a follow through. Certainly we are seeing a situation where momentum on a daily basis is weakening. We have higher momentum here, we get a little weaker there, and then a little weaker here. That again is indicative of prices potentially going lower. So the buying is weakening in this market, and now it's the seller's turn, or the bear's turn, to see what kind of power they can muster up to send prices lower. As said before, we're looking at a potential support level near term of right around 1325, the low of the last cycle low. Before that, around 1310, if you will, and then this final low that we saw in early June of right around, call it 1265. So the near-term support, I'm expecting this market to head lower. Let's wait and see what happens. We're going to follow up with this and track this. Now, on a personal note, I actually sold this market short, and I bought a bear put spread, a put vertical spread, where I bought a higher strike price at 1350 and sold a lower strike price at 1325. And I actually did this at really a little bit early here, but used value charts or value bars in this case to help me identify timing there. And I did this really prematurely right in this area right here. So I should have waited an extra day or two and caught the top. I actually was tempted to lift the short put position of my vertical spread right after this top day, but unfortunately I got caught up with other business and was not able to get to the markets soon enough. And by the time I did, we already were well underway in our sell-off, and I just figured might as well leave that on since that was part of my original strategy. So missed out on that opportunity, but I'm still going to make money if we can get a closing below the 1325 level in the next, call it 15, 18 days from now. I'll be in great shape. Let's follow up in this market and see if we can identify more short selling opportunities and see if this analysis is actually going to pan out with us projecting lower prices. We'll follow up soon. Take care.